Let's start with the big story. It was a day of positive consolidation for the markets. The G20 chair as well as the strong gains in Asia helping the markets extend their winning streak to 4 straight sessions, Harsha.
That's right. Although it was tempered a wee bit by some profit booking that came in the later half of the day, but the Nifty managing to close up 45 at 32.56. The Sensex putting on about 185 points to close at 10,534. On What's Hot tonight, we ask, will this up move continue? Joining us tonight to discuss this, Balasubramaniam, CIO of Birla Sun Life Mutual Fund, joining us. Bala, many thanks for joining us and congratulations for winning the top honours at the CNBC TV18 Crystal Mutual Fund Awards. What's your assessment of how the markets are poised at this point? They have gained considerable ground to reach new highs in 6 months.
First of all, thanks for the compliment. Last year, of course, despite we going through actually a tough market and tough year in general for the capital market, we as a team have done reasonably well in terms of maintaining the overall performance of all of our schemes. I think the way we are seeing at this point of time from the market as a whole for the coming year, I think the last 3-4 months have been witnessed actually in the global market, which have never been witnessed in the last many decades. At the same time, some of the steps that has been taken in terms of stimulating the economy, both from the monetary point of view as well from the fiscal point of view, probably I think our assessment is that as we move forward next 3-4 months, we should see them really, I think, showing its color in terms of changing actually the outlook for certain sectors, outlook in terms of consumer sentiment changing for better, also the outlook in terms of spending from the government towards various infrastructure activities picking up in the coming 2-3 quarters.
Right, Bala, outside of the stimulus impact, now what is really your view in terms of fund flows into the market? Is there fresh money coming in? As a fund house, what are you currently doing? Are you investing or are you staying out on the sidelines?
Of course, we were holding a bit of cash all of last year when there was a lot of uncertainty, both in terms of economic outlook and second in terms of earnings and both in terms of volatility. I think with the volatility, I think generally getting reduced, and we also gaining somewhat of confidence in terms of the recent stimulus would probably start playing its role in terms of helping actually the economy to stabilize first and then look for a growth. We have been deploying our cash for the last 1.5 months. I think at this point of time, we must be sitting on about cash level of anywhere between 12 to 15%. I think the way we are seeing is the investors have to, of course, have to look at the mutual funds, one from the overall part of the asset allocation into various asset class, as well as the equity and asset class have to be looked at mainly from the long-term point of view, and also the other alternative investment asset class which is prevailing in the mutual funds in the form of commodities fund, as well as the debt funds which are largely driven by the interest rate view that's actually prevailing at every point of time. I think investors have to look at the various products that is being offered by the mutual funds, one as part of the asset allocation, and second, equity and asset class, we are at a stage where the valuations are cheap and the dividend yields are pretty high and the earnings yields are, I think, much better than what we have seen. Earnings yields gap is actually much better than I think what we have seen in the last 3-4 years in the bull market. I think investors who actually invest in a market which is a bit of uncertain and the valuations are cheap, I think eventual payoff is much higher than what they would have otherwise got in the normal market.
Well, as we speak, Bala, at this point in time, of course, the US markets have opened weak today. But this up move clearly has been in sync with the global market up move. Do you think if global markets fall, this immediate trend will also be reversed for us? And what about domestic factors like earnings and elections?
Yeah, I think what you rightly put it, I think the G20 is, I think the general expectation was that it's actually achieved something beyond what was expected. That's one big positive change. And second, I think any recovery what you will be witnessing in the global market, which includes the US and other developing nations, definitely I think India is also going to take part in that. Mainly I think the risk capital will come back. I think flows will start coming back, and also we could expect the allocation towards the emerging market going up. I think the fund flows, I think as long as it remains positive, you could expect that India also to get the benefit out of that. Second, at the end of the day, I think beyond a point, the flows alone cannot actually drive the market. I think we'll have to see a similar kind of support coming from the Indian corporates in terms of earnings and also the local stability in terms of the political stability. I think these two driving factors probably will still have some kind of time away. The recent change I think in the overall accounting regulation, which is of course AS 11, which also has been modified to ensure that the Indian corporates doesn't need to provide for any mark-to-market loss on a notional value, arising out of currency transactions, and now it's getting postponed by 2 years. These are some of the changes I think would also make the numbers which will come for 31st March quarter ending as well as the full year would look different from what you would have assumed maybe about 1.5 months back.